Welcome back, everyone. I'm happy to announce that I am 43 pages away from finishing the essay of Warren Buffett. Those essays are a masterpiece from the stage of Omaha, and today's reading has been about a company integrity, and these are my four biggest takeaways from it. First, Warren Buffett talks about why he moved his company from the Nasdaq exchange to NYSE exchange in the 1988. And the reason why he moved his exchange away from Nasdaq to the NYSE was because he wanted tighter spreads, which will lead to lower transaction costs for investors looking to invest in his company. And the second takeaway I got was when he talked about why Berkshire Hathaway has not done a stock split yet. He says the reason why he has not done a stock split was because of the kind of investor that he is looking to invest into his company. The kind of investor that he wants to invest in Berkshire Hathaway are people who have owner-oriented mindset and are going to hold the company stock for a long period of time. He does not want short-term oriented investors who are just looking to trade in and out of the company for quick profits. And the third takeaway I got today was about acquisition trap. He says that when a company has massive cash reserve, the CEO of the company usually wants to go on a massive acquisition spree. And he says that the best use of the company fund will be to expand the current company operation or to buy back the stock of the company, which will lead to higher value for the current owners of the company. And the fourth takeaway I got today was about the stock swap trap. He says that when a company wants to acquire another company and the company wants to use a stock to buy the company, let's say a company A wants to buy a company B, and company A current market value is below its intrinsic value. It is wise in that situation to use cash to buy company B and not give away free funds to company B, because at that point you are basically giving away money because your company is not trading above its intrinsic value. Those are the four biggest takeaways I was able to get from reading 47 pages today. Next, let's talk about my trading today. I was holding Audi CHF as I said yesterday, and today it went up over 23 pips. I had an opportunity to shift my SL into profit, but instead I opted to put it in break even, and I had an opportunity to take a trade on pound CHF. And because I already shifted my SL from Audi CHF to break even, I thought that the risk was worth it. So I did that. I moved my SL to break even for Audi CHF, and I took the pound CHF trap. And I had this belief that I'll be able to control the pair cut on it because will be able to check it on the 2 hour and the 4 hour time frame. But what happened the following hour surprised me. Both pound CHF and Audi CHF just had a massive drop from the high that I left it at, which was something I was not expecting. I was going to have a slow drop, so if it does not go my way, I will be able to still take out before pound CHF hit SL and hopefully close Audi CHF in profit. But when I checked the position, both of them had already closed, and my account dropped from $4, which I had it to $1.7. So I added funds to it to take it back to $4, and now I'm kind of out of the market. And my friend is also out of the market because he has not been able to see any opportunity, and so have I. And yeah, the little difference I saw today was that when I was taking out, I didn't go back to my 14 pair to look for opportunity in the market. I just calmed down. I was okay with the position because I stick to everything I said I was going to do. I had a very good risk on both trade. Because I did that, so I didn't have I didn't feel the rush to enter position, and I knew that less is more. And since Audi CHF hit my break even, I still have 2 trades for this week, which means that as long as I'm patient, maybe an opportunity will come on those 3 pairs. And if it does not come, hopefully my friend sees an opportunity that is able to take us in for the week. And yeah, that's how I approach my trading. Calm, patient, and no more rushing, because I have to change things up this year for me to be profitable. I'm doing everything I can to make sure that my mindset is set on that. And the next supposed to be something I found interesting on the internet or something that happened in my life that I would like to share. And today when I was scrolling on Instagram, I saw Warren Buffett video where you say that the best thing an individual can do for their self is to be exceptional in whichever field they choose. And yes, that's what I've been doing so far. That's the reason why this year has been all about finance. Yeah, last year I was juggling finance with a lot of other things, but this year I've said my main focus, especially for this Q1, I want to go heavy on finance to read as much book to change my habits in think as an investor. Just shift, be more of a be more just shift like I want to shift my mindset and move towards the mindset of a profitable day trader. Although I'm not one yet, but if I can be able to shift my mindset to that with time, I'll be able to achieve my goal. And Q1, they see a lot of time left. And yes, it feels like this first 3 weeks of January has been bad, but at the same time, the first 2 weeks yes, has been bad. But this week so far, I have stick with everything I said I was going to do, and I've been able to. This is just day two of doing this, and hopefully, I'm able to do this for a prolonged period of time. And I believe the profit will come because the strategy is good enough to bring that. And yeah, that's how I've been approaching things so far. Thank you all for listening. See you all tomorrow.